This is how I saved my clients $74,000 on a single real estate deal by changing one thing. Most investors in Canada are unknowingly paying tens of thousands of dollars to the government unnecessarily. And not because they want to and not because they're generous, but because they think that this is normal and that it's the law. But there are other ways, legal ways, to make sure that you're keeping your money in your pocket. So if you're self-employed in Canada and you're using your personal money to buy real estate, you're probably doing it wrong. Let me show you what to do instead and maybe save you a lot of money in the process. Let's talk about a real client of mine, and we'll call him Mr. Bob. Mr. Bob runs a successful auto business here in BC. His company makes about $2 million a year in revenue, and after paying all the expenses, he's left with $300,000 in profit sitting inside his corporation. Bob wants to invest in real estate. His goal, he wants to buy a $1 million rental property. In order to do that, he needs to put down 20%. That's $200,000. But he also needs $100,000 to cover his personal lifestyle expenses. This is great news to Bob because he knows that he has $300,000 sitting in his operating business account. So he thinks this is perfect. Naturally, his first instinct is to transfer that money into his personal account so that he can purchase his investment property. And even though this seems right, but this method is actually what ends up costing him thousands of dollars in taxes because he has to pay both personal and corporate taxes. When it comes to taking money out of your operating account for your living expenses and real estate investments, there's two ways to do it. There's the right way and then there's the wrong way. It all comes down to a very simple change using a holding company. So let's look at the wrong way that he could have done it and the smart way that I taught him. The first option is no holding company and the expensive way. This is the way that most people are used to. Let's say Bob carried on the way he's used to and takes out the full $300,000 out of his business account personally. Because it's coming out as a dividend, he's going to end up paying around $90,000 in personal tax on it. That leaves him with only $210,000 in his pocket. Remember, he needed the full $300,000. There's a non-negotiable $100,000 to cover his personal expenses, but he also needs $200,000 for the down payment to invest. Obviously, that's not enough. In reality, if he wants to be left with $300,000 after taxes, he actually needs to pull out $390,000, which he didn't even have in the account. So when Bob hears this, he assumes that he just can't buy an investment property. And he can't just because of how he would have withdrawn the money. Now let's talk about how he can maintain his lifestyle and buy that investment property. I told him, Bob, do yourself a favor and open a holding company. This is the right and the smart way of investing. He can move that $300,000 from his business to a holding company tax-free using something called intercorporate dividends. From there, he only has to take out $100,000 as a dividend to support his lifestyle. Now, he does have to pay taxes on the $100,000 withdrawal, but it will only cost him around $16,000 in tax. So he's left with $84,000 personally. But the full $200,000 is going to be sitting in his holding company untouched by tax. That $200,000 can be directly used as a down payment for his investment property. No extra tax, no over withdrawing, and the property is now owned by the corporation and not him personally. This means that the rental income and the future profits stay in the company. And he gets to reinvest without taking a personal tax hit. The asset is also protected inside the corporate structure. Let's take a minute to compare the differences between these two methods. With no holding company, he had to take out $390,000. He paid $90,000 in tax, was left with just enough for his needs, and owned the property personally. With holding company, he only took out $300,000, paid $16,000 in tax, had all the money he needed, and owned the property corporately. Now let's summarize what happened. So with holding company, Mr. Bob can now pay $74,000 less in personal tax, money that would have gone straight to the government. He didn't have to over withdraw from his business to make up for the taxes, and he didn't even touch more than what was needed for his lifestyle. That means less personal tax and more money working inside his corporate structure. And because the investment property was made through holding company, it's protected. If something goes sideways, lawsuits, liabilities, or whatever, his personal assets aren't exposed. Best part, now that his money is still in the corporate world, he can keep reinvesting it without paying personal tax every time. That's how you build momentum. That's how you grow real portfolio faster. Most entrepreneurs, maybe even you watching this right now, are bleeding money on taxes and don't even know it. Why? Because your accountant probably just filed your taxes. Your mortgage broker just wants to close your deal deal and not structure your wealth, and your banker might not even bring up holding companies because they don't fully understand how it benefits you. That's why learning about these strategies matter. If you're incorporating and making over $200,000 a year, you actually owe it to yourself to stop doing things the hard way. You worked hard to earn that income, and now it's time to structure it smart so you can keep more, grow more, and protect it all. Believe it or not, I don't just talk about this stuff because it sounds smart. I've done it myself, I've helped my clients do it, and I've seen firsthand how a small change like this can lead to a massive shift in wealth. So if you're building something, a business, a portfolio, a future, this is your wake-up call. Stop working harder and start working smarter, because that's the difference between making money and keeping it. Thanks so much for watching. If you're in Surrey, Langley, or anywhere in Vancouver area and want to chat about real estate goals, I'd love to hear from you. You can book a coffee session with me with the link in the description below. I'll see you next time.